And are you planning to keep these higher interest, higher risk loans in the future in your upcoming loans?
Yes, there will be different.
Expanded auto invest settings. Why don't these start at 50 euros?
I can already hint that one of these news are related to that as well. So.
Und damit hallo und herzlich willkommen zu einem neuen Video von Northern Finance. Mein Name ist Alex Black und ich habe heute den Chief Operating Officer Michael Stamm von EstateGuru hier zu Gast im Video und ich stelle eure kritischen Fragen, die ihr mir gestellt habt für EstateGuru. Welcome to the video, Michael. Nice to have you.
Hello, nice to be back.
So today I want to ask some questions by the investors for you, for EstateGuru, and I would say let's get straight to it. The first one is about the funding volume. Right now you have it between 15 and 20 million euros per month. How do you expect this to develop in the future with all the expansion going on right now on your side?
Yeah, we have had a really nice growth compared to last year. So we have already done more volume compared to last year. So last year we did around 120 million. So this year we expect to go over 200 million. But as we really want to make our vision true and change the way how the real estate financing investing is done in Europe and beyond, then this is not where we stop. So we continue growing, and so from this 20 million, we expect to grow around 40 to 60 million next year. So, but this growth, what we always balance is that this should be, as we're dealing with investors' money and everything, that we really need to be cautious as well as how quickly and how qualitatively we are expanding. So we're always keeping and balancing it with our risk balance as well.
Yeah, that's right. And EstateGuru always said we have had defaulted loans, but we managed to recover all of them completely. Now you have your first defaulted loan with a loss. What is your take on this?
Yeah, it had to happen at one point. So we have been now in business already 8 years. So we have been funding over. Soon we have been funding almost 500 million of loans. So and already like over 250 million is repaid back as a in a like normal way. So yes, this was a case of one smaller loan in amount of 130,000. But what we were able to recover was around 120,000. So this was repaid. So this equals around like 90% of the initial principal amount. And the reason for that was in several. So for this specific ones, the main things were all the costs related to the proceedings. So there were a lot of taxes what had to be paid, bankruptcy absences, fees, and also there's a law which says that some of the like you need to keep like 15% for other creditors as well. So even though you had this like first rank, as we were not able to sell with a higher value what we were expecting, then from the amount we also had to give something for the other creditors for second or third rank, what was there. So, but overall, yes, taking out that this was the loss was around 10,000 euros in total, then this is still marginal. So I would still say that it's amazing that we have been actually able to keep the loss to zero of this far. In usual lending, you are always basically predict something right of every year. But as we have had these first rank mortgages and collaterals for all our loans, then this means that we have been able to recover this far all the funds for the investors. So total we have been actually already recovered over 12 million worth of loans. So with profit for the investors. So this shows that this business model is still really strong and unique for the investors.
Yeah, that's right. Yeah.
But that said, we will anyway continue working hard. This is built in our main KPIs that we are closely monitoring the defaults and how we are able to recover them, how we work with them. Even with this case, there's still surety in place, but we can proceed and try to continue recover this written off amount, but the likelihood of that is quite small. But we basically give maximum what we can still do. So working with these topics is really important for us.
And the general default rate of your portfolio, of the outstanding portfolio, right now is at about 8.2%. And how do you plan to decrease this again to levels between, let's say, 5 and 6%, which it used to be 1.5 years ago, approximately, before the crisis?
Yeah, you are actually right. 5% is something what we're aiming. So as we have talked previously, then you could go also aim to have zero defaults. So but then this means that probably you're cutting off a really big part of your business and even many good loans, which you are basically minimizing risk. So 5% is something which is let's say industry standard. This is something we aim, and at the moment we're actually looking the progress with defaulted loans what we have. So there are some couple of bigger ones which are actually affecting most of this rate. So and the risk team is quite optimistic about solving some of the cases and reach their goal of having this back to 5% level by end of the year. So yes, recovery is part of our everyday work when our risk team is considered, and that's why we also really want to be really transparent about how we do things, and we are publishing this portfolio overviews. With that, we actually take also additional responsibility for us that we can really need to push and then work hard on these topics.
Yeah, that's something I appreciate. The updates in the blog published every month. And I think it's good for investors and for transparency's sake of everybody involved. But the interest rates have been dropping in recent months. Right now, they're in most cases around the 10% mark instead of 12%. Why did you decide to go for a little bit lower interest rates?
So when you look like how usually this traditional lending works is that actually when you estimate the projects or look the projects, do the due diligence there, then you actually also take consideration this risk of the project. And usually the interest reflects the risk of the projects. If it's a higher risk project, then you are also applying a higher interest for that. This hasn't been really true for case of, let's say, crowdfunding or platforms, because there's a really heavy demand from the investor side. Yeah, I want to higher interest and everything else. So I think this far maybe platforms haven't had the possibility to really use this kind of really risk-adjusted models in interest as well. So, but now as investors are also getting more knowledgeable, this is like step-by-step moving to that more risk-dependent models that we can risk adjust. So if it's a really good project with, I don't know, really strong borrower or everything else, it's like logical that you are actually offering a little bit lower interest, because the likelihood of something happening with this project is smaller, and through that actually you can attract these borrowers to your platform. And at the same time, there's a heavy competition happening as well in all the countries where you are. So I think investors shouldn't be worried, because this means, as I said, there will be still higher interest projects well, but the ones which are lower, this means that these are all also less riskier. And I think even 7% compared to the alternatives, this is a really good earnings, especially if you know that you can access really already high-end borrowers. And yes, and through that actually providing even more diversification and more different projects on all the markets.
Mm-hmm. And are you planning to keep these higher interest, higher risk loans in the future in your upcoming loans?
Yes, there will be different type of projects still. Like what we're looking is still we're looking what kind of project this is. If you are, for example, starting with a land, for example, it's a different risk than when it's already ready building what we're renovating. Or if you are giving the bridge loan, which is already ready built apartment and you are lending against that. So liquidation and the price volatility, these are all really different for this different projects. So that's why also they are priced differently. So, but as we are the experts in real estate financing, then we continue to work with different projects and different type of projects, meaning also different interest possibilities.
Mm-hmm. And you're also expanding right now pretty heavily, especially in the German markets and other Western European countries. Can you tell us more about that?
Yeah, Germany is picking up very well. A lot of interest from the market, but as we're still finishing the last activities, then probably with the full strength and we will be starting to see in upcoming years. But parallelly, as we've been publicly saying as well, that we're actually now opening up new markets, more focused. So this will be also at one side, the possibility for investors to diversify their portfolios even more, but also as an overall for the company, this means even the more growth coming out of in upcoming years from these new markets.
Right, and you also had pretty heavy funding from venture capital and also from private investors into the equity of yours. How do you use these new funds in order to boost growth exactly? What do you focus on?
So yeah, I think we are probably the biggest platform at the moment with the least equity raised additionally. So like looking the general picture in Europe, but yeah, we have been growing heavily organically. So everything what we earn, we will reinvest back to the company. But in recent years, we have been also using this strategic partnerships with these venture capitalist companies. And this has been really, for the investment reasons, to basically build these reserves to execute your strategy and tactical plans for the year. And always the aim of using these funds is to raise to the new level. So we have this buffer that you can actually do some of the investments before you basically get this extra revenue, and already through this investment raise to the level. And this has been the case always for us that, for example, first time when we partnered with the Speed Invest, one of the leading VCs in Europe, they came in like at the beginning of 2019. By the end of the year, we were already again profitable and reaching new sales volumes. So the logic remains the same for this last round. So I probably can't go really detailed where exactly we are going to invest and what the strategic move we're going to make, because this gives an advantage for listeners maybe. But overall, what we have been said publicly as well is that this goes to three main areas. So we continue investing into this loan sales capacity, and this also means going to new countries. So we have now in pipeline additional 3 countries where we enter. Also, if you are increasing your sales capabilities, you need to balance it with the investor side. So retail investors remain also really big part of our business. So we'll be investing to these products, also making the product even better for retail investors. But parallelly, as we are expecting this exponential growth, then we also see that we need to balance our sources of capital. So supporting these institutional structures is also one part where the investment money is spent. So we now have a full capital market teams in place, but setting up the structures is also needs some additional funding capital. And last, and also really important, is that investment into technology and through that into scalability and automation. So already now we have like this retail investor side, talk about process of investing is fully like automated, but there's still a lot to do in different aspects of our business, and especially on how to even more improve this quality of our portfolio quality and etc. So like, yeah, hope this gives you some glimpses how we try to use this money and through that actually get to the levels that I was speaking in the beginning.
Mm-hmm. Right. And do you have new features or products planned? Some of your, maybe indirect competition like Evo Estate or Reinvest24, they also have rental opportunities and not only the loans. Is this something that could be interesting for you?
Yeah, there are different business models out there. Rental is a little bit different business. This means to do it properly, you need to actually, if now investors are asking like, hey, you are lowering below 10%, but if you go to rental, then it means long-term loans probably, and it means to do it properly, you need probably around 5% or 4% loans to give it out for the borrowers, or if you want to do it yourself, then it needs a little bit different setup. So at the moment we're still sticking to our core business. So, but I think in a overall perspective, it's good that investors have a little bit different ways of diversifying the portfolio. So not only maybe real estate loans, but we can do this other type of products as well, which will help them to diversify their portfolios. But concretely about our new features, yes, we're working on different topics. So we just actually launched this instant exit solution. So if somebody wants to liquidate its position straight away and doesn't want to wait in the secondary market, then now there's this possibility, as long as there's still some money available in this dedicated pot of money what we allocated for that product. So this is one new feature, but parallelly, yes, we are working on an improved referral program and some other interesting and good stuff coming in the last quarter. So keep reading our newsletters, and then you will get the latest updates what is going to happen. So.
Yeah, I would also like to buy some of EstateGuru loans at 35% discount. But apart from that, let's get to the last question here. It's about expanded auto invest settings. Why don't these start at 50 euros and instead they are now starting at 250 euros? So you need a really big portfolio in order to go into those expanded auto invest settings and truly automate your investing on EstateGuru in order to have a passive income like you wanted to. Why didn't you change this feature yet?
So we are aware that this is one of the most discussed topics among investors, and we did a little test in the beginning of the year that when we had this campaign about giving it free, that everyone can also start using all the functionalities with 50 euros. So when I mentioned earlier that some interesting news coming in upcoming months, then I can already hint that one of these news are related to that as well. So, but I don't want to commit on timeline, because with timelines, when you don't already have this feature ready, you can't always give this concrete time. But our aim is to announce next big news in at least latest by end of the year.
All right. Thank you very much, Michael, for answering the questions of the investors. Thank you for taking the time again to talk with me, and I hope to see you sometime soon in your offices again when the situation allows it. Wish you all the best, and thank you again for being in the interview.
Yeah, thank you that you took me here, and happy to soon talk to you how we are progressing. Okay, have a nice day.
You too.